Hello everyone, how are you doing today? So friends, I met this gentleman in the month of October 2019, and I was so thoroughly impressed by his understanding of the subject options. And a couple of you would be remembering my face-to-face. I've kept the face-to-face right in front of you. Yes, we are talking about none other than P.R. Sundar, the options man. Do you remember I used this term for him? Yes, he's the one who has cordially decided to record a webinar for all of you. And this is for much better cause. It's a noble cause of donating the money to the needy ones in this hour of need, which our country needs right now. So PR, welcome to this webinar. Can you hear me?
Yes, I can.
With PR, we are very excited that you selected Elon Markets to be your platform provider, your platform support guys to host a webinar. And I'm thoroughly excited to see so many people have registered for your webinar. You truly deserve the number which you have received. And thank you so much for contributing this money to well-being of our nation.
I must thank you for helping me to do this show.
Not a problem. It's our pleasure. We are always there to help this entire country in reaching the right, taking the right knowledge and going to the next level of financial market participation. Now, before I, kind of give it to you, because this is your day, I don't want to steal moments which you deserve. Before I go into you, just making a small announcement to people. Friends, you know Elon Markets, it has been always a value for money platform, providing you free as well as very effective paid content. And now we have launched Stockage web version. I'm not sure how many of you have seen this version, but this is going to be a killer version. Retail investors a desire to do more and more research and analytics. So make sure that you visit the web version, and the app version. The latest Stockage version 5 is also live now. So you can upgrade and you can enjoy the power of doing your own analysis and do your own work from Financial Markets of India. All right, so having said this, I'm again coming back to the main point, main agenda. Today is PR's day. He wants to share his knowledge, his wisdom with every one of you, and I don't want to be in the middle of it. So PR, go ahead. This is your time. This is your moment. Go ahead with it.
Thank you.
So I'm going to make you the presenter, PR.
Okay. Wait.
Okay, kindly share your desktop. Yes, we can see your desktop. Fantastic.
Can I begin?
Yes, PR.
Hi. Hi, this is PR Sundar. Welcome to the webinar. I can tell you very honestly, I did not expect such a tremendous response to my webinar. And thank you everyone who participated in this webinar, and that too for a noble cause of donating the sum to the charity. Webinar on options by PR Sundar. I will tell you how I am going to take this webinar. Broadly, there are two topics. One is my journey so far in the stock market from my childhood. And second one, there is a strategy which I am going to explain in detail how we can play around with that strategy. So the topics which I'll be covering, I'll be talking about my childhood, then starting the career and dream, and decided to take the plunge, why trading, early part of my trading, the turning point in my life, or some regulatory environment, how I shot to fame, and when to take risk, and strategy, adjustments, margins, risk management, and some concluding remark. The list seems to be very big. So I thought how I'm going to present the webinar. So I thought of talking about myself for 1 hour plus and then talking about strategy for 1 hour plus. It may be a little bit boring. So therefore, what I decided, I'll talk about my journey a little bit, then talk about the strategy a little bit, and again come back and so on like that. So it's just like a 2-story running parallelly. I do not know how effective it will be. So let me wait for the comments. And before starting, let me tell you one important thing, because the number of people who are registered for the workshop webinar is too high. So therefore, it is not possible for us to take the comments from you. We will not be able to reply for your comments or questions. So therefore, we will not be taking any questions from you in this webinar, just due to the sheer number of people participating. However, you can always ask your questions, and all the relevant questions we will be compiling, and then after that we may come out with another YouTube video or webinar to answer all your queries. So be assured about that. And before beginning, I would like to thank my friend, Mr. Vivek Bajaj, who has kindly agreed to help me to carry out this webinar without any monetary benefit. So that is a great thing that he is doing. So I also use their application Stockage and to check various data. So I hope you also do that. Now we will go to the webinar. The first thing, I talk about my childhood. For rich kids, people say, oh, this guy born with silver spoon. You must have heard of this. And I used to tell my friends, I was born in a very poor family. I was born not even with a plastic spoon. My father was an unskilled worker and he had 8 children to feed, and they could not afford for even the food for me. So they put me in a free hostel. That hostel is a charitable hostel, and that is where I studied from 6th standard to 10th standard. And believe me, during these 5 years, morning they will give rice and night time also rice, nothing else. In the charitable hostel, students studying in various schools stay in that hostel. So it is not possible for them to provide lunch. The lunch is provided by the school. In Tamil Nadu, there's something called midday meal scheme. So I still remember there also every day they give some rice. Interestingly, from my childhood, I have some connection with North Indians. In Chennai, there is a place called Saukarpet, which is populated by North Indians, and that is where my school was there. If any rich North Indian, if he has any son or daughter, they have birthday or something like that, they will approach our school and they will pay some money to our school and to give some banana or apple or something like that during the lunch midday meal scheme. So I always pray these North Indian boys and girls should get birthday so that I can get one apple or orange. And I still remember during these 5 years, I got only one opportunity to eat sweets. That is, when I had some problem in my teeth, I was going to a hospital, government hospital. While walking, I saw there was a sweet stall called Agarwal Bhavan in Chennai. It was an opening ceremony of that stall. They distributed free sweets, and I lined up in a queue to get some free sweets and eat that sweets. But today, just by writing one check, I can buy that stall. I bought my first slipper when I was in 10th standard. So why I'm telling you all these stories, I suffered a lot in my life, in my childhood, and it is because of some charitable people, donation, so I could survive in my life. And that is why today I decided to donate such a big sum. The webinar I'm conducting, I'm giving you the service, and you people have paid the money for the service, and the sum of money collected is very huge, and the entire amount will be given as a donation. And hopefully, some of this money will be producing more and more PR Sundar in future. That was the objective here. Now, we look at some option basics. There may be some people who do not know anything about options. When people asked us questions even before the webinar, we told them very clearly, you should know what is put option, what is call option, some basic informations you need. So here, I can just go through what are the simple things you have to know. What is put option? Just to give you an example, today, market is trading at, let us say, 9,200. Nifty trading around 9,200. And people may do the betting that it will go below 9,000 or it will not go below 9,000. So that is called put option. Some people will be betting the Nifty will go above 9,500 or will not go above 9,500. So that kind of betting is called call option. Who are the buyer of put option? If the market is at 9,200 and if you say that market will go below 9,000, so you have to pay some money. So then you are called put option buyer. And if I say market will not go below 9,000, and then the money that you are giving will be coming to me. So I am known as seller of call option, seller of put option, or a writer of put option. The game begins now. At the end of the expiry, if the Nifty is above 9,000, so you lose all the money. The buyer lose all the money. Seller can keep all the money with him. But in case if the Nifty closes below 9,000, for every 1 point it is closing below 9,000, the seller will have to return 1 rupee to the buyer. So this is the game. So here the payoff is not linear, it is a non-linear payoff. Similarly, if somebody say Nifty will be going above 9,500, then he is known as buyer of a call option. And if I say it will not go above 9,500, I'm known as writer of call option. Whatever money he pays, I will be receiving it. Then the game continues. If market is closing below 9,500, the buyer loses all the money. If the market goes above 9,500, for every 1 point it is going up, the seller has to pay 1 rupee to the buyer. Then what is the strike price? Some people will do betting, Nifty will go below 9,000. Some people will do betting below, it will go below 8,900. Some people will do betting, it will go below 8,800. So that is called strike price. How long this contract is valid? So the contract is valid until the expiry date. For weekly options, every Thursday is the expiry date. For monthly options, last Thursday of the month is the expiry. Suppose a buyer says Nifty will go below 9,000. If he is prepared to pay 100 rupees, then that 100 rupees is known as premium. Okay, I stop here because I'm sure 99.999% of you know all the basics already. So the moment you are coming to me, that means you are ready to learn a slightly higher things, not the basic things. Okay, now little bit about my story. And many people ask me, sir, the way you explain the things in stock market is really very good. Right? And that is partially because I was a school teacher with my profession. So what happened? I told you I was born and brought up from a poor family. So I was very weak in English. So therefore, I chose BSc Mathematics because mathematics is the only subject where you use little English. And believe me, my first sentence I spoke in English when I was at the age of 22. So since I've chosen BSc Mathematics and I did MSc Mathematics, then I decided to become a teacher. ஆசிரியர் பணி அறப்பணி அதற்கே உன்னை அர்ப்பணி. So this is a Tamil which says that teaching job is a full noble job and then you dedicate your life for the teaching job. So I became a teacher. And when there was an advertisement came from Gujarat school, they offered a very high salary and with all facilities. And I was so much interested to get a job. I applied for the job, but no response. And after that, I got a job in Andhra Pradesh, a school called Rishi Valley School in Andhra Pradesh. And I was very happy there. But in South India, the salary is very less compared to North India. But still, I was very happy. One day, one of my friends wrote a letter to me. Those days, no Facebook, no email, no internet. So it's only letters. He wrote a letter by saying that his family is in big problem and he could not find a job. Can I help him to get a job? On the same day, I also received an interview letter from Gujarat asking me to attend an interview in Gujarat. And they said they will pay me for the train tickets. I did not know even a single word in Hindi. I was not confident of venturing into North India of fear of language. Just because I wanted to help my friend. The interview from Gujarat came to me. I cannot send my friend to Gujarat. But if I go to Gujarat, by chance, if I'm happy with the offer, if I join that school, then my existing post will become vacant. I can recommend my friend for that. So with the sole intention of helping my friend, I ventured into Gujarat, and that was a very big turning point in my life. And I got a job in Gujarat, and I was very happy. In fact, I can say in my teaching career, if there is a golden period, that is the period which I spent in Gujarat. So why I'm telling you this story? What is more important in your life is the values. And today I'm so successful. If you ask me, what is the single most important thing that is the reason for my success, I can say the values that I have. And here I would like to take an opportunity to congratulate all of you. And I'm sure you all have same kind of very good values in your life. That is why when I said, I want to conduct a webinar for charity, you all willingly paid the money and participating in this webinar to learn something. I think in my promo video also I said, I like Infosys tagline, powered by intellectuals and driven by values. No matter world best teacher come and teach you the best strategy they are teaching you, I can tell you, if you have got no values in your life, you are not going to be successful. So to be a successful trader, you have to be a good valued person. So that is what I wish to tell you at this point. Now, you go back to options basics. There are so many misconceptions about options in Indian market. I would like to talk few things. Buyer versus seller. When it comes to option, the buyer pays only the premium money, but seller pays huge margin money. And most of the people, they always tend to highlight the positivity about the option buyer, because that is where they can do a lot of business. But here I'm going to tell you what are the disadvantages for the buyer, what are the advantages for seller. Buyer pays only the premium money, there is no doubt about it. But seller has to pay huge margin money. That's fine. But buyer, whatever money he has to pay, he has to pay cash. Whereas the seller need not pay the cash, and he can pay the required amount through the collateral. You can give shares as a collateral, mutual fund as collateral, you can give G-Secs as collateral, and so far even FD was also taken as a collateral. But recently I heard NSE has stopped taking FD as a collateral. Another big thing people talk, buyer carry limited risk, seller carry unlimited risk. And people say, very, very famous one, I received many times in my timeline. Option selling is like collecting penny in front of a road roller. So there are funny things. If somebody says something and everybody copied it, okay, without even thinking over whether we are copying the right material. Road roller, I'm sure everyone know, it cannot move faster. It will move so slowly. Even a child can take the penny in front of the road roller and can escape, right? So at least next time onwards you want to say, you say option selling like collecting penny in front of a bullet train. Don't say road roller. So buyer carry limited risk. There are always two sides of a coin, and it is how you look at it. A buyer has only 5,000 rupees with him. He got no more money. He buy the option for 5,000. End of the month, it becomes 0. So how are you going to do? Are you going to say he lost only 5,000, so risk is limited? Or you are going to say he lost his entire capital? Many times people always tend to talk option selling, you can blow up your account. Why option buy, you cannot blow up your account? No, option selling is unlimited risk. Okay, fine. If I got 10 lakh, I put 10 lakh and I play in option selling. If I lose, how I'm going to lose 100 crore? I'm going to lose maximum 10 lakh only. Whatever money I have, I'm going to lose it. Buyer also has 5,000. He buy the option for 5,000. He also can lose. So it is depends on how you look at it, right? But theoretically speaking, seller carry unlimited risk. But what is more important? If a buyer view goes wrong, if the market goes against him, there is nothing he can do. He can keep a stop loss and can come out. Whereas option seller can do n number of things. He can do lot of hedging. Say for example, I took bullish view, I sell put option, market reverses coming down, I can sell call option, or I can go short in futures. So there are many things we can do that a buyer cannot do. And people say buyers carry unlimited reward, whereas seller carry limited reward. Now, let us say a buyer buy an option for 10 rupees. Sometime it go to 20 rupees. Where does he book the profit? He book the profit 20 rupees, then he got 100 rupees. If he doesn't book the profit at 20 rupees, then it comes to 0 rupees. So because you carry unlimited reward, the people have a lot of dilemma where to book the profit. But there is no such dilemma for option seller. I sell an option for 50 rupees. I know that my maximum profit is 50 rupees. Either stop loss had to be hit or I get the entire 50 rupees. Of course, before stop loss hitting, I can do some hedging. That's a different story. Now, many people entice the option buyer by saying that you have limited risk, unlimited profit. I can tell you, limited risk, unlimited profit, there is a third dimension to it, which nobody knows. You can get high reward, always comes with a high risk. Let us say you go and rob a bank. It's a high reward, but it is high risk also. But if anybody say without high risk, you are going to get a high reward, that means there is a third dimension to it, that is called probability. The probability of winning is very low. Say for example, you buy a lottery ticket, only for 10 rupees or 20 rupees. What is the risk? Maximum risk is only 10 or 20 rupees. But what is the probability of winning the game? Is very low. So always remember, there is nothing in this world called low risk and high reward. So risk and reward, they are always proportional. Okay. Now I talk little bit, I think I talk more about options. Now I talk a little bit about my personal life. After working as a teacher in Gujarat, I got an opportunity to go to Singapore and to work as a teacher. And I tell you, Singapore is one of the countries which is offering one of the highest salaries for teachers. You will be surprised to know that a teacher teaching in a secondary school, teaching 6th or 7th standard, his salary is about 4 to 5 times higher than a bank manager salary. So while I was in Singapore, I was just watching a television, and one day there was a program called One Day with Boss, where a television anchor go to a entrepreneur house and stay with him for one day. And this guy was a hedge fund manager. So he wakes up in the morning. It's a very big bungalow. Wakes up in the morning, go to the gym, work out, then go straight to the terrace, an helicopter standing there. He gets into the helicopter. Helicopter was flying over the Sydney harbor. There was a yacht standing there. So helicopter stops at the yacht and he gets into the yacht, and there were some 4 or 5 people sitting in front of computers. He gives some instructions and then go for a breakfast. I saw, wow, what a lifestyle. But what all I know, he was a hedge fund manager, but I didn't even bother to know what is hedge and what is fund. But I was looking. I was a teacher. If I don't get a next month's salary, I cannot run my family. But when we see this kind of thing, no, it was a real inspiration. So I always tell, I came from such a poor family background. I tell you, I did not even know how to dream. So the first thing in your life, you have to learn to dream, and you have to dream. But what is dream? Dream is not what you get when you sleep, and dream is something that will never let you to sleep. So that is the inspirational quote. Dream is not what you get when you sleep. Dream is something that will never let you sleep. So always plan big. Okay, now let us come back to our main topic. Everyone is waiting. What? We have come here for the webinar to learn some strategies. What Mr. Sundar is talking about is life. Okay, we are coming to the main topic. I'm going to teach one topic, as I said, and before explaining the strategy, so I'm assuming something, and most of the people who are attending this webinar do not have a big capital. A research says the average capital of Indian traders is about 3 lakh rupees. So I thought, if I can design something for the people who have got somewhere between 1 lakh to 3 lakh, I can design a simple strategy and people can make some money. At this point, I would like to tell you, I did not like to do this kind of webinars. I am not interested in taking the strategies to the mass people. And that is because, I'm sorry to tell you very openly, stock market and movie field, these both are dream factories. And most of the people here, they are selling the dream. But I do not want to sell the dream. When I launched my first workshop, some people asked me, so many people conduct workshop, what difference you are making? I said, other people are selling the dream, but I'm not selling the dream. I'm selling only the business. So again, here, I would like to re-emphasize that what are the strategies that we use? We are business people. We deploy some money. We expect some kind of a decent return for our investment. And you want to make 100% return per month, 200% return per month. All you have to do, you have to subscribe to some Indore-based companies, and they will promise you that kind of returns. And most of the time, you will be losing your entire capital in few months' time. Okay, right. So, very popular strategy that we are going to use. This is a very, very popular strategy called short straddle. What is short straddle? Let us say Nifty is trading around 9,000 now. Then sell 9,000 call option also, and then sell 9,000 put option also. So that is called short straddle. In the short straddle, you make profits when the market trades in sideways. But however, there is a unlimited risk if the markets move violently. Okay, just to give you an example, I'll show you. This is NSE India website. Now the market is trading around 9,154. I go to live market, option chain, equity derivatives. Market is around 9,150. So this side it is put option and this side it is call option. This side is put option, this side is call option. If you look at the 9,150, put option trading around 150 rupees, call option also trading around 150 rupees. I'm talking approximate. So 150 rupees plus 150 rupees, you are getting about 300 rupees. When is the expiry? Expiry is coming Thursday, 30th April. So if you sell 9,150 call and 9,150 put, you are collecting a total premium of 300 rupees. So for the next 4 days, if the market should not move more than 300 point above or should not fall more than 300 point more. So in that case, you are going to make some profit. But if the market falls more than 300 point, so there is going to be a problem. There will be some losses. So, but now look, there is a problem of coronavirus. And last week, crude oil went to minus $37. So there are a lot of things happening now. A 300 point fall or rise is not a big deal. Nifty can fall more than 300 point or Nifty can shoot up more than 300 point very, very easily. So therefore, this strategy selling is very, very, very risky. Many people actually ask me before the webinar, sir, you said you are going to teach one strategy. Please tell me what strategy. So I told them, I'm not going to tell you what strategy I'm going to teach. Yes, I'm going to keep it surprise. Another thing, why I did not tell, if I tell short straddle or I sell short strangle or I say call, they are all there in the Google. You just go to Google, you can find everything, right? So I always say successful people don't do different things, but they do things differently. So here I have explained one strategy, which is a short straddle. And I also showed you how risky is this one. But then what difference we make. So that is what you are going to see now. Now, from current slide. Okay. We never do short straddle in the current month. Why? Current month, you sell call option and put option. The premium that you are collecting will be 200, 300 point, and Nifty can move more than 200, 300 point. So that is why we never sell short straddle in the current month. Typically, you have to choose 9 to 12 month expiry. And many people ask me, sir, only 3 months options are available. That is not true. Only for Nifty, options are available for 6 months, 1 year period. Of course, it is available 2, 3 years also, but there is no liquidity. But up to 1 year, there is enough liquidity. I tell you, preferably enter at the end of January. Why preferably enter at the end of January? Usually, FIAs have their financial year from January to December. So December, they close the books, and January, they freshly allocate the funds for each country. So markets are likely to make a big move depending upon their allocation. And then on February first week, budget will be coming. So there'll be a lot of expectation about the budget. So somewhere around January end is the right time to take a position, and take a position in December month straddle. Okay. Again, most important thing, if India VIX crosses 30, you have to exit the position no matter whether you are in profit or loss. So you take a position, you can keep the position only as long as the India VIX is less than 30. And you can, I will show you where you can actually see the India VIX. You go to nseindia.com and you click this button. You can see the India VIX here. So India VIX is right now, it is 39. So I will tell you very, very, very important information. If you are holding any position, the moment India VIX crosses 30, no matter how much you lose, you have to exit the position. You are not supposed to be holding the position. And then you can reconsider entering only after Nifty falls below 30. So that is a very, very important piece of information you need. Okay. Then okay. Now I'm going to give you an example. Suppose you want to take tomorrow. You can see, you click here, you can see up to December 2023. But if you look at the December 2023, you won't see any liquidity here. Or even 21 also. You can see there are no liquidity. There's just hardly one contract or something like that. But you look at the December 2020, you can see enough liquidity. See 7,000 put option. Yesterday 125 contract traded, 6,000 put option, 133 contract traded. So 8,500 put option, 226 contract traded, so on and so on. So there are a lot of contract, like 3,000 contract traded, 10,000. So there'll be enough liquidity if you are playing around in December. But in December contract, the liquidity will be available only at every 500 point. Means you can see the liquidity in 9,000 call option. Then after that, you can see the liquidity only in 9,500. 9,100, 200, 300, you will not get it. And because the Nifty is around 9,150, either you have to take 9,000 or 9,500. Let us say you are looking at 9,000. 9,000 put option is also trading around 1,000 rupees. And 9,000 put option is also trading around 700 rupees. So that means if you are selling both 9,000 put and call, you are going to collect about 1,700 point. So tomorrow or day after tomorrow, after 1 week, even if the market falls like 200, 300, 500 point, you don't have to worry. That is because you are keeping 1,700 point as a buffer for you. So that is why we always prefer to do long-term options. In US markets, they call it as leaps. But in India, there is no name. I just call it as a long-term options. Okay, we will come back to this later. Okay, now I go back to my life story. After some time, I decided to quit my job in Singapore So I came back to India, and I was thinking, what should I do? Earlier, I said I was working as a teacher in Gujarat. And you know, Gujarati people are very famous for stock market. In fact, those days, people used to say something about Gujaratis like this. 95% of the money in the stock market coming from Gujarat, the remaining 5% coming from Gujaratis settled in other states. So the stock market is so popular in Gujarat. When I was working, I learned something from Gujarati friends. I still have among my friend list, okay, Gujaratis are the most, not even Tamil Nadu. So I learned a little bit, but after I went to Singapore, there was nothing, everything was stopped. Again, I came back. I was looking for a second career. So I was thinking of entering into stock market, but my wife did not agree. That is because she has not seen people making profit in stock market. She has seen people only failing in stock market. She said, why to take risk? You don't take risk. And I told her, the biggest risk in our life is not taking any risk. But at the same time, we should not be taking undue risk, and we have to take a calculated risk. And I told her, I have a very good mathematics background and I can play with the numbers. And I assured her that I will be taking a calculated risk and I will be able to shine in stock market. But still she was reluctant. Okay. So now we'll go back to our strategy. I've given you a strategy, short straddle, and I suggested sometime in the end of January, you take the position for December. And let us see, we will do the back testing for last 3 years. So let us say what happened. Okay. Now, look at 2018, position taken. 2018, position taken on January 31. Why did I take January 31? As I told you, February 1st was the budget. And that time, everybody was talking whether the finance minister will bring long-term capital gain tax or not. So that was close to the budget. I took a position on January 31. Then, though I said January month you take, that is applicable only for 4 years in a 5-year block. Every 5 years, there will be a parliamentary election. Whenever there is a parliamentary election, depending upon the election results, markets may tend to move very, very violently. Just to give you what is there in my memory, 2004 there was election, Nifty fell 30%. 2009 there was election, Nifty gap up 20%. And 2014 and 19 there was not very big moves. So markets are expected to make very, very big moves on the election years. So therefore, on the election years, it's better not to take position well ahead of the election and take the position just closer to the election. And you may all remember 2019 parliament election, the poll results were counted on May 23rd. Exit poll results came on May 20th. So I took positions about 1 week before. 2020 also I've taken position around January 31. Okay, this I will come back little later. I will show you the performance of 2018 first. Okay, past performance of 2018. January to 31st, 2018, the Nifty closed at 11,027. Because the Nifty closed at 11,027, at the money call and put is 11,000 call and 11,000 put. 11,000 call was trading around 750, 11,000 put was trading around 400. The total premium collected is 1,150. Okay, from where we can get all this data? So I can show you from where you can get all this data. First thing is that you go to products, you go to indices, and you click historical data, and you click search here. You can get the historical data of the Nifty. Let us say here you choose 2018 January 31 to the same 2018 January, or you can choose some other date also, January 1 also, like. Okay, so you click here, you can get the data of January 2018, the whole month data you can get. As I said, I created a position on 31st of January. So that time the Nifty closed at 11,027. And that is what actually I put it here. January 31, Nifty was 11,027. Then at that point of time, what was the prices of call option and put option? For that, what you do, go to live market, go to option chain, equity derivatives, just click on any option. And you click on the historical data. Okay, you can see here, you click here, you can get only the data for the last 3 months. You will not be able to get the data beyond 3 months. If you want to get the data beyond 3 months, you have to click here. And here you can choose any data for any year. Here I'm choosing index options for Nifty 50, which year I'm choosing 2018. 2018 January I created the position, but I created a expiry December 2018. An option type, call option, strike price I have to enter, and for which period I want the data. I want the data for the January 2018 because I did it at January 2018. So January 31st is when, maybe I can put it 30 to 31. You can see on January 31st, the call option closed around, last traded price closed around 750. So that is what I put it here. Nifty 11,000 call option was 750. Right. Now, I do not want to waste so much time showing all the data. I actually entered all the data in PowerPoint. So that is 400. The total premium I collected was 1,150. At the end of the year, 11,000 call went to 0. 11,000 put closed around 220. So the total premium is 220. Out of 11,000, 1,150 collected, we have to return 220. The profit was around 930, and the profit per lot was around 70,000. And believe me, the margin deployed for this was only about 50,000. And the return came around more than 100%. And many people look at the indicator, look at the intraday, and look at many things. Right? So, and they are like taking a lot of tension, lot of things. But how many traders make more than 100%? And here, I just created a position in January. I just waited the whole day without doing anything. At the end of the year, I got 100% return. But again, it was lucky, right? Not every year you will be getting 100% return. Now, If you look at 2019, as I told you, 2019 was an election year. So there is no way you can do in the month of January. I waited until the parliament election over. And at that time, it was more or less sure that BJP is going to win. So that's what every opinion poll showed, and that was a mood of the country. So it's not a rocket science to say that it's difficult to predict. It was very easy. So May 20th was the exit poll result. So once the exit poll result will be there, so markets will be factoring in the result. So therefore, one day before May 20th, I created a position. That time Nifty was 11,400. 11,500 call was trading around 675. 11,500 put was trading around 470. Total premium collected was 1145. But at the end of the year, 11,500 went to zero. 11,500 call went to 670. I had to return 670 rupees. The profit was 475 rupees. And the profit per lot was about 36,000. So 2018, the profit was 70,000 plus, but 2019, it was 36,000. But one difference, in 2018, I held the position for 11 months. And here, I entered sometime in the month of May. So I was holding the position only for 7 or 7.5 months. So you also have to see that time. Like you're getting 1 year, 50%, and 8 months, 40%. So 8 months, 40% is better than 1 year, 50%. Right. But unfortunately, what happened in 2019, the SEBI has increased the margin money. So 2018 margins were very, very low. In 2019, the margins were fantastically high. And then here I would like to tell you one more interesting thing. Sir, you are saying that opening position and closing position, but in between markets make very violent moves. Okay, go and check. Though this premium I collected is 1145, and after that market went to 12,000. From 12,000, the finance minister presented a budget. The markets were not happy with the budget. The market crashed and it came all the way from 12,000 to 10,600 or 650, something like that. But even with such a violent move, okay, you go home and take the data, all the past data as I showed you, put it in Excel, you study that this position has never gone into even a single rupee loss for the entire remaining period. So that is the fantastic thing about playing in long-term options. Now, but sometimes it is not necessary that you have to sell options at the money only. Sometimes you can take a view also. What I did in 2019, I've actually taken a bullish view. I'm not a technical analyst. Technical analyst people can show everything in chart, very, very easy for them. But I'm like, I can't say I'm a fundamentalist, but I'm a strategist. So I look at the data point and I make a decision. So I cannot show by chart, but I can tell you what has happened. 2019 May was parliament election. About 6 months before, November 2018, there was election in 5 states. In all the 5 states, BJP lost. So people, particularly FIAs, decided that in parliament election also, BJP will lose. There will be hung parliament. And because of that, they started selling continuously from November 21 all the way to February 26. What has happened? On February 26, Indian fighter jet went into Pakistan, dropped the bombs and came back safely. So that is when the FIAs have changed their mind. And they decided that BJP will win again. So from March 1 onwards, or in fact, from February 26 onwards, they started buying. They started buying so heavily. the March month alone, Nifty shot up 10%. And that momentum continued. And all the magazines were predicting the BJP win. So what I did personally, I took a bullish view. So instead of doing 11,500 straddle, I have actually done 12,000 straddle. So therefore, my profit was much more than 36,000 rupees because market closed around 12,200. I got a fantastic profit. So it is not necessary that you have to look only at the money straddle, but you also can take the view of the market a little bit, not here and not very big. Now, past performance. Always people say, sir, all the winning trades you are showing, you are not showing the losing trades. And we all know what happened in 2020. Market went to 12,400. From there, it has come to 7,500. And it was a very, very, very huge move. This coronavirus is one of the worst crises in the world. And markets across the world are facing bigger problem than Lehman Brothers collapse. So therefore, definitely this year would have been a challenging year, but still let us look at it. So in 2020, on January 31st, last day, one day before the budget, it was trading around 11,962. If you have done the 12,000 call, it was trading around 900. 12,000 put, it was trading around 500. The total premium collected was 1,400. Okay, before going further, I would like to show you one thing. And most of you should know that I'm writing a blog every day. My blog ID is prsundar.blogspot.com. And I tell you, I've been writing my blog since 2013 without any fail. So I started writing blog in 2013 August. For almost 7 years, I've been writing the blog. During my initial period, hardly 50, 100 people also not reading my blog. And that time there was a broking company called ATS. So they encouraged me to write. And one day the promoter of that company was talking to me and I told him, even if there is one person reading my blog, and I will continue to write my blog. So many people say, sir, what have you done for the retail people? But I'm doing this at free of cost. Every day in the morning, I'm giving my views at free of cost. There I actually give my view of the market. And that I've been doing for the last 7 years consistently. And now roughly about 15,000 people are reading this every day. So let us look at 2020 and January month and 31st. That is when the people are supposed to take the position. And on that day, February 1 was the budget. So one day before, I've given something called budget strategy. And just read what I've given. Many people ask me what strategy we have to do for budget. Let me give you some detailed explanation. Look at the following problem in the last 12 years. Lehman Brothers collapse in 2008. Greece on the verge of bankruptcy in 2011. Taper tantrum 2013. China currency devaluation in 2015. Demonetization come Trump winning in 2016. Brexit in 2017. Inflation-led fall in 2018. So in all these cases, Nifty gap down around 400 points and the Bank Nifty gap down around 1,200 points. So every 1 to 2 years, we have been having some big problem. So in February 2018, the US markets fell 10% in one day. There's some inflation problem. And I've written here very clearly, for every 1 2 years, we are going to have some problem. That's what I listed here. And in 2020 came the coronavirus. And then again, you see, when everyone is thinking of budget, I am thinking of coronavirus. And see, today everyone is talking about coronavirus, but this blog was written on January 31st. I have written about the coronavirus. And Hong Kong markets fell 6% in last 2 days, and China markets will open on Monday. There can be some panic selling in China. It's possible China can fall 10% if the virus affects more people. So in that case, we will be having a big problem like the problem mentioned above. So that means I've already indicated we may have problems something like above, all the big problems. So in fact, this coronavirus is there already. So actually, I suggested people to keep away from the market. So it is not that every time you have to be in the market. Sometimes you should know when you have to be away from the market. But still, I'm assuming that you have taken position. Okay, still I'm assuming that you have taken a position. 12,000 call was 900, 12,000 put was 500, the total was 1,400. But what happened after that? Market started moving violently. And I told you, whenever the India VIX crosses 30, I told you have to exit the position, no matter whether you are having a profit or loss. On March 9th, the India VIX crossed 30. So that means you are not supposed to carry position until the December end. You have to exit on March 30. March 9. On March 9, the Nifty 12,000 call was 1,400. I think there's a mistake. Is 12,000 put option was 1,400. 12,000 call was 200. The total was around 1,600. So we collected a total of 1,400. And now it is 1,600. So effectively, there is a loss of 200 rupees. So that translates into about 15,000 loss. One thing, you made 70,000 profit year before, 2018. You made 50,000 profit the following year. And this year, you have made a loss of 15,000. But what is the big deal? But look at the people, how much they are suffering. Even the people who are having the cash market, they have lost 50-60%. Everyone was buying Bajaj Finance from 4,900. Now it has broken 2,000. So there's a loss of more than 60%. So many good quality stocks, cash market, forget about futures and options. Okay, but despite that, and here we have come out with a 15,000 rupees loss. Now, when to re-enter? This 15,000 loss also we can recover. We have to re-enter, but when do we re-enter? We re-enter only when the VIX falls below 30. Now, once VIX crossed 30, it went all the way to 886. Now it is coming down. And assuming that you have held on to this 12,000 call and put, just imagine how much would have been your loss when the Nifty actually went to 7,500. So that would have wiped out your entire capital. So always remember, risk management is very, very, very important. I think I'm going too heavy on the subject. Now maybe time to tell you a joke. So there was this scientist called Einstein, and he used to go to few cities, few colleges, a few universities to give a lecture on theory of relativity. He took a car, took a driver, went to one college, gave a lecture. Then again go to another college, gave the same lecture. So every time when he was giving lecture, the driver used to sit in one corner of the hall, used to listen to Einstein. So when Einstein was going to another college, he said, "Sir, people say that you are a very big scientist, a great scientist, but you are talking the same thing everywhere. And I used to sit in one corner, I used to listen all your speeches, and by this time I have already memorized everything. Even I can also speak like you." Then Einstein said, "Oh, is it? Okay. We are going to the next college. There nobody knows who I am. So when we go there, you introduce yourself as Einstein. and you introduce me as your driver, and you go and speak. The driver took the challenge. And Einstein was sitting in one corner of the hall, and this driver actually went onto the stage and gave an excellent speech on theory of relativity. And once the speech is over, everywhere Einstein used to ask one question: is there any doubt? And this driver also asked the same thing: any doubt? Then one professor stood up. He said, "Sir, you were explaining the theory of relativity there. Sir, that one is not very clear, sir. Can you explain more?" Then Einstein was smiling. Oh, this driver took the risk of acting like Einstein. Now, a professor asked a question, he will not be able to answer because he does not know anything about the subject. He thought the driver is caught. When the professor asked this question, the driver said to the professor, "You don't ask this kind of silly questions to me. This kind of silly question you go and ask my driver sitting there, he will be able to explain in a better way." So this is just a joke. But what is the moral of the joke? The driver here took a risk. When the risk hits at his face, he should know how to run away from the risk. So if you know how to escape when the risk hits it at your face, better don't take the risk. So as I told you very clearly, option selling carries unlimited risk. So therefore, whenever there is some risk, and you should know how to get out. That is why I've given the guideline. So where to get out? So the standard rule is that you get out when the VIX crosses 30. Okay. So, but still we are in loss only. But what I mean to say, compared to other people who have lost so heavily from 12,400 to 7,500, so this loss is not a big thing. Okay. I think again, I've gone too much into the strategy. Okay. Now, let me come back to some information. It is a well-known fact that 95% of the people in stock market lose money. In fact, this 95% of the people lose money is including investors and traders. If you take only the traders, 99% of the people lose money. There's another interesting fact. When the new traders come to the market, 90% of the traders lose 90% of their money in 90 trading sessions. Okay, what is the reason for all these things? Is there any other business where 99% people lose money? No. Why only in stock market? Somehow I feel that those who are supposed to be here in the market, they are actually not here. And those who are not supposed to be here, but they are here. And here I would like to tell you a true story. One day I met one of my friends. He was my friend about 30 years before, school student, friend. I asked him what he's doing. He said, "I'm working in a government service. I'm getting 1 lakh rupees salary. My wife also working in government. She's getting 50,000 salary. We are together, we are getting 1.5 lakh salary. We are very happy." Then he asked me what you are doing. I said, "I left my job in Singapore. I come back and I'm doing trading. So maybe if you're interested, I can teach you how to do the trading. Why don't you bring some 10 lakh rupees and do some kind of trading?" He said, "Sundar, are you stupid? You know, I'm getting 1.5 lakh rupees without risk because we are working in government. So when I'm getting 1.5 lakh rupees without any risk, why should I take risk in trading? Why should I come to market? No, I am not going to touch stock market." I said, "Okay, if that is your wish, you no need to do." Then he took my number. He has given his number. 2 years later, he called me. He said, Sundar, I have 25 lakh rupees capital with me. And can you please teach me how to do the trading? I said, what happened? You said you don't want to take risk. He said, no, Sundar, my wife is getting 50,000 rupees salary. I was getting 1 lakh salary in government. He was working in LIC insurance, LIC, and he got a job in a private insurance company. So they offered double the salary. So he thought, oh, when I'm getting double the salary, so he shifted to a private. But within 1 year, there is some problem, some internal politics or something, and he lost his job. But once you lose the government job, you cannot go back. He could not get any other job. Now he said, now I'm unemployed, Sundar, but my wife is earning 50,000. So please teach me some strategy so that I must make at least 51,000 rupees per month, because I don't want to lose face in front of my wife. And I told him, I'm not going to teach him. He said, you are my best friend. How can you say like this? And I told him, I'm your best friend. That is why I'm telling you. 2 years before, when I asked you to come, that time I was not your best friend. You did not listen to me. So the reason is that when you are working with the government, okay, you are fully secured. And that time, if you would have come to market, if you made some losses in the initial period, you could have withstood that loss. But now you are coming with a objective of compulsorily making 51,000 rupees to make at least 1,000 rupees more than with your wife, and you are coming. And so you cannot come to the market with so much pressure. So you tend to make more mistakes. So according to a research, the people tend to take more risk actually when they are in trouble. But you should be taking risk when you are not in trouble. So when you are in trouble, you are not supposed to be taking the risk. So that is why I said, people who are supposed to be taking the risk, they are not taking the risk. The people who are supposed to be not taking the risk, they are the people taking the risk. So that is the biggest lesson I have learned. So this is stock market. Anything can happen. There is a possibility of a loss. I always tell my friends in a funny way, you are working with your boss. You can go to the boss. You can say, you have to give me 50,000 every month. But don't give that comment to the market, because the market is God. You can't go to the God and say, you must give me 50,000 every month. Sometime God will give you 10 lakh. Sometime God will give you minus 1 lakh also. So you treat stock market as a God, and you accept whatever it is giving, and you don't give any comments to the market. You can give comments to your boss, but not to the market. Okay. So that is a thing. Okay. Now, many people ask me why I prefer trading. Or I can tell you like some general thing, like what normally happens to most of the traders. People come to the market. When they come to the market, they do not know anything about the market. They will be naturally getting into the cash market. They may not know what is futures, what is options, what is hedging. Okay, they are like higher level. They come to the cash market. In cash market, what happens? The reward is very, very low. I give you a best example. Let us say somebody bought Reliance Industries in 2008. It was 1,000 rupees about. From 2008 to 2017, for almost 10 years, it is the same price, never go up. For 10 years, the share price never moved. But in 2017 to 2020, the share price gone up by more than 3 times. So what happens sometimes in stock market, markets tend to underperform for a long period of time, and they tend to hugely outperform within a shorter time period. But what happens most of the time, we will enter in 2008, we will exit at 2017, and after that the market will go up. So therefore, the stock market returns are non-linear. 1 year it can be minus 20%, 1 year it can be plus 200%, and so on. So the people feel that the cash market reward is very, very low, and then slowly they venture into futures market. Once they venture into futures market, then they will know how risky is this business. So by the time they understand that the risk is very high, by the time they understand that the risk is very, very high, they would have lost heavily. They would have lost about 90% of the capital. Then they become buyer of an option because they want to take a revenge. They want to recover all the losses. I receive a lot of messages. Sir, I lost 25 lakh. I have only 2 lakh. Can you recover 25 lakhs? How to recover 25 lakh from 2 lakh? Right? So they're all impossible things. So that so they have a little capital, but they want to recover the huge loss. So that is possible only in options. And many brokers, many analysts, they entice them. Oh, you come to us, we give you a recommendation for buying of option. And that is where they lose the remaining money also. Right? So in the initial period, I also did the same mistake. I went to the cash market, then ventured into high risk futures market. But luckily, I did not lose much. And then I decided to keep away from the market. And that time, one of my friends told me that he will do trading on behalf of me. And he asked me to give him some capital. I gave him, and he did the trade for me. What he did, he was buying the option. I used to sit with him to watch. And most of the time, he was losing the money. So that is where I realized, if option buyer keep losing like this, who is the guy who is making on the other side? It is the option seller. But again, don't come to the conclusion that option seller will always win. Most of the time, option seller will win, but sometimes option seller may lose heavily. But if you know how to escape from that, then that is where your skill lies. So my famous quotation, if you trade in futures, you have no future. If you trade in options, you have plenty of options. Okay, now we are coming to a second strategy. So this strategy is called iron fly. You may think, I told you I'm going to teach only one strategy, but how come I'm coming to the second strategy? Actually, this strategy is not a different strategy. It is the same strategy, short straddle only. But some people do not want to take position with the overnight risk, which means if I sell call option and put option, okay, let us say tomorrow, if some big natural disaster happens, earthquake or tsunami, market keep falling 30-40%. Like for one or the other reason, if the markets are moving violently, 40%, 50%. So I may be having an unlimited risk. So some people do not want to do unlimited risk strategies. So they want to limit their risk. So for every one option you are selling, if you are buying an option, that becomes a limited risk and that becomes iron fly. Okay. From today, I advise all of you to do only the limited risk strategy. That is because from today, when you take a position with a hedging, that means with buy option, your margin will be reduced very, very drastically. Roughly speaking, one option, it costs about 1 lakh rupees now. If you do with the hedging, it may cost about 25 to 30,000 rupees only. So the margin money is very, very less if you take the hedging. So what is the hedging? So iron fly means you sell at the money call and at the money put. So that is short straddle. Then for safety, you buy one far out of the money put option and buy one far out of the money call option. So in that case, this becomes a limited risk strategy. So this strategy is called iron fly. I promise you one strategy. Now I've given you two strategies. Okay. Let us take 3 minutes break, and after 3 minutes, I will start again. Will you begin? Yeah. Welcome back. So we are discussing about iron fly. So there are few points to remember. And before going to that, let me explain how the iron fly works. Okay. Let us say, for example, let us say you want to do tomorrow. You want to take a position for 31st December. Let us say market is around 9,000. So let us say you want to sell 9,000 call and 9,000 put. 9,000 call trading around 1,000 rupees, 9,000 put trading around 700 rupees. So you're getting 1,700 rupees. So because you are collecting 1,700 rupees, let us say 300 rupees you keep a stop loss maximum. So that means as long as the Nifty moves 2,000 point up and down, there is no problem. So 2,000 point below 9,000 is actually 7,000. So you have to go and buy this option. After selling the straddle, you have to buy this option. The same way, 11,000 call option also you have to buy. So you are selling at the money straddle, then buying one far out of the money call and put. So even for due to some untoward incident, there is a very big gap down, gap up, 10%, 20%, lower lock, that kind of things, this buy option will save you. But remember, it is not only 300 rupees is the loss. Okay, you are paying 200 rupees here, and also you are paying another 270 rupees here. So almost 500 rupees are paying for this. So this 500 will also be the loss. So what I prefer to do, the buying of option is done only for the purpose of hedging. So I do not prefer to buy the option in the same expiry of December. Instead, what I do, I sell the 9,000 call and 9,000 put in December. Then after that, the buying of option, I do it in the current week. You look at the current week, 7,000 put option is trading only 1 rupee. And 11,000 call option trading only at 1 rupee only. So you are selling straddle 9,000 call and 9,000 put, and you are collecting about 1,700 rupees. But for protection, you are buying the option. For buying the option, you are paying only 1 rupee. Now, from now until December, so there are about 8 months. By 8 months is about 8 into 4, about 32 weeks. Let us say 35 weeks. Even for 35 weeks, every week you are buying for 1 rupee, you're still going to lose only 35 rupees only. So 35 rupees among the in the put option, 35 rupees on the call option, you are going to lose only 70 rupees. Whereas you do buy in a December option, you have to give 500 rupees. Right? So another thing is that you are collecting 1,700 rupees and you are giving about 70-80 rupees in these weekly options. So that is immaterial, right? So something like that you can do. So you can do option in weekly also, you can do option in monthly also, or you don't want to take risk, you just want to do in December option also, you can do. So that will be too difficult for me to explain. So there are some plus and minus points in doing hedging in weekly, hedging in monthly, and hedging in on the same contract. So there are certain plus and certain minus points, which I have no time to explain now. Okay, right. So here what we do, points to remember: buy protection in weekly options or monthly options, and that will reduce the protection cost. 2020 strategy we discussed, there was a loss of 200 rupees, right? But if you have bought the put option, and you would have in fact made a profit of about 400 rupees if you have bought some options in monthly. And I can show you. Just to show you, I go a little bit back. Okay, look here. The January 31, the Nifty was around 12,000. 12,000 call and put was 1,400. Okay, and then what happened? Once you created this 12,000, and let us say 1,000 point below, you want to buy the protection. Oh, 12,000. So you have to see the 11,000. Okay, you actually you can click anything. So historical data, or click here. Let us say index options, Nifty 50, 2020 expiry. You sold the option in December expiry on January 31st. January 31st means it is February series. So on the February month, you are buying a put option. Buying the put option of 11,000, 1,000 point below. Okay, and let us say you want to see the data for last 90 days. So on January 31st, you would have bought this put option for 15 rupees. That 15 rupees at the end of December would have gone to 0. Okay, I think there's something is error. Okay, so that would have gone to 0. So in February month, you paid 15 rupees for protection, and that 15 rupees has gone to 0. So you lost 15 rupees. Then what you would have done? On the same date, you would have bought the March put option. Because once February you buy put option, that goes to 0. March put option you have to buy. Then April put option you have to buy. So what do you do now for the month of March? The same put option if you have bought. So on 27th February, you should have bought. Okay, March put option, it was trading around 48, around 50 rupees. Okay, and then we have seen the PowerPoint on March 9th, the VIX crossed 30. So we have to exit on March 9th. When we exited, we have booked 200 rupees loss. But look here, on March 9th, this was trading around 650 rupees. You bought for 650 rupees, trading around 650 rupees, you would have made 600 rupees profit here. So you made 200 rupees loss in the straddle, in the December straddle, and you made 600 rupees profit. Of course, another 15 rupees you lost in February. Even if you factor in all these things, you are still coming out with a profit of around 400 rupees. So don't you see, when the markets are so bad because of coronavirus, the market has fallen so much, right? As I said earlier, even cash market folios are bleeding and you still come out with 400 rupees profit. Okay, so that is the power of hedging. So whenever you
Looks like there is some technical problem. I guess we'll be back in a few minutes. Kindly keep your patience.
okay. Now, so when we do iron fly, we need to buy protection. So the buying of protection we can be done in weekly options also, monthly options also, or in the same as December option also. And in December 2020 strategy, we have already discussed, we have actually made 200 rupees loss. But if you have done the hedging with this iron fly, you would have actually made 400 rupees profit. And I will show you how. If you look at this index options, Nifty 50, year is 2020, and because we have created a position on January 31st for the December contract. That is a straddle. We have sold 12,000 call and 12,000 put because the market was at 12,000. So after doing that, now we have to think of buying a protection. If you are looking at buying a protection in the same contract, that means the same December. So what would happen? You look at the December 2020, 9,000 call, 9,000 put. 9,000 call, oh sorry, we have done the December 12,000 call and put we have done. So December 12,000 call was that time, it was 900, put was 500, so it's a total 1,400. So if you were to buy for protection, some 11,000 put or 10,500 put, that will be very, very high. So that is the nature of long-term options. I'm just giving you one example. Right now, market is trading around 9,000. Right now, if you are doing 9,000 call and put, you can see about trading around 1,000 rupees and 700 rupees. Okay, continue. So right now, 9,000 put option trading around 680 rupees. You want to buy a protection 1,000 or 1,500 point below, and the protection cost is so high, 270 rupees. So I do not prefer to buy the protection in the December contract because for protection, the money that you pay is so huge. But now look at the current month. Let us say market is around 9,000. If you want to buy 1,500 point below, you want to buy protection, that is 7,500, and you can see that will be trading oddly of 2 rupees, right? It'll be trading around oddly 1 or 2 rupees only, right? So either you can do the weekly option, or even you can do monthly option also. Monthly option will be slightly more. Okay, so maybe I just go through a little bit more, and we have discussed past performance December 2020. On January 31st, the Nifty was around 12,000. We sold 12,000 call option 900, 12,000 put option 500. Total premium collected 1,400. But what happened? Unfortunately, the market crashed on March 9th. India VIX crossed 30. India VIX crossed 30. So therefore, we exited the position. When we exited, we have lost actually 200 rupees. So this is what we have done. But now, same thing, this is a short straddle, but now same thing, if you have done the hedging, how we have done the hedging. So because we have sold 12,000 call and put, so we have to buy the protection below. So what we do, if you take this to screen, so first thing is that index options, and symbol is Nifty 50, and the year is 2020. Our straddle is in December, 12,000 call and put. Okay, and now we want to buy a protection 1,500 point below. 1,500 point below, we want to buy a protection in the February contract. That means for 1 month. So we want to buy put option 7,500 put option. And you want to see the data for the last 30 days. Last 90 days. Index option Nifty 50, 2020, 27.2 put option 7,500. Why not order not coming? Okay, something has gone wrong. Index option Nifty 50, 2020, February, put option 7,500. We want the data, maybe we can, since we have created position on January 31st, we have to buy on January 31st. We have to see what has happened in the until February. February expiry was 27. So we click on that. Okay. I think that something has gone wrong. I think that's the thing is not working. So maybe I can tell you, you can go home and check yourself. So we would have made about 600 rupees profit in the options. So we would have exited this strategy safely with about 400 rupees profit. Okay. So that is the advantage of doing the iron fly. So from May 1 onwards, SEBI is changing some rules where for every sell option, if you buy some option, the margin requirement is very, very less. I just give you a simple example. So far, if you are selling one call option, the approximate margin money is 1 lakh rupees. When you sell a call option, 200 or 300 point higher, you buy a call option, your margin money comes down drastically from 1 lakh to 25,000 to 35,000 only. So at least for the purpose of reducing the margin, it always makes sense to buy an option for protection. So therefore, please remember, don't do short straddle, always do iron fly. Iron fly is nothing but short straddle with some protection. But the short straddle, you do it in December month contract. And for the protection you are buying, that you can do either weekly or monthly. And then you will be safe. And nobody can tell you option selling is unlimited, because by buying the option, we are making the unlimited risk also into limited risk. Okay. Now, some people ask me, sir, if the VIX touches 30, I don't want to exit. I still want to carry position. Can I do some adjustments? Right? So you want to do adjustments, you can do it, but you need additional capital. So that is beyond the scope of this webinar. So that will be difficult also. I will not advise you to do that. So therefore, let us keep simple. We enter, take a position, enter the position, buy the protection. As long as there is a profit, enjoy the profit. And if the VIX crosses 30, whether there is a profit or loss, exit and be happy. Even if you lose something, you be happy that you have not lost so much like other people. So that is what we can do. But if you have been doing this consistently for many years, there may be 1 or 2 years you may be losing 100, 200 rupees, but in all other years you will be getting a fantastic profit. Over a longer period of time, your profit will be really very, very good. Now, what are the margins? As I told you, from this month, the margin requirement is going to be very, very less. If you want to do one short straddle with protection by one iron fly, if you want to do, I'm not very sure, but definitely the margin required will be less than 1 lakh rupees. So if you have less than one, if you have around 1 lakh rupees, you still can do one lot. Okay. And here, as I told you in the beginning itself, I'm assuming two things. One, the people who are attending this webinar, they don't have too much capital. As I told you already, the average capital people have in India is only about 3 lakh rupees. If you have got 3 lakh rupees, you can do 3 lots, right? But that is only if you buy the protection. You don't buy the protection, the margin will be very high. And second thing, I'm assuming that most of the people who attend this webinar, they have got some other work to do. They cannot spend full time in front of the monitor to monitor the prices of the options. So this kind of things you need not worry. You can just take the position, can go and even sleep for 1 month and nothing is going to happen. Right? So that is the biggest advantage. And I always tell people, money making process in your life should be a boring process. It should not be an exciting process. And I give you one example. Go to the race course. People will be talking, come on, come on, come on. No, excited, right? But do they make millions of dollars? No, they're all gamblers. They lose money. They get a lot of excitement, but they lose. But do you think Mukesh Ambani or Tata or Birla talking, sitting in the office, come on, shouting like that? No. They sit very calmly and they do the work. So in fact, the money making process should be a boring process. It should not be an exciting process. So most of the time, people want excitement in the stock market, and that is why they lose. The strategy here I taught is a very, very boring process. Once you take a long-term option, you can sit down for even 1 month, 2 months, you don't have to do anything. And still you make a decent profit. And I tell you some more advantages right now. Okay, let us say you got 1 lakh rupees. Okay, you can put that 1 lakh rupees in some liquid funds. Right now, I recommend to all my clients Bharat bond. So Bharat bond, why? Because now even the debt funds seems to be more risky. There are defaults. Franklin debt fund was closed. But Bharat bond, the money invested there is lent only to the public sector companies. That's why I ask my clients to put the money in Bharat bond. You put the money in Bharat bond, you are going to get an assured return of 7.58% for over a period of 10 years. So you are going to get about 7.5% interest from the Bharat bond. Then you use that as a collateral and do this long-term options. And then even you make another 20-25%. So you are going to get more than 30% return. And I find many people coming to stock market, sir, I want to make 5% per day, 6% per day. But I tell you, go and talk to the business people. Making 2% per month is so difficult in India now. So always keep your expectation low. You want to make 25-30% per month per annum. It's very, very easy by this kind of strategies. But of course, you will not get excitement. You will get only the money. But you give the money to, you subscribe to the services of indoor-based companies. They'll give you the cost. You buy this option, You will get a lot of excitement, but you will not get the money. So you want money or you want excitement, you decide. Okay. So margin management. So since the strategy I taught here is a very simple strategy, no adjustment, nothing. So therefore, there's no need to worry about the margin management. Okay, right. So I think I've given too much heavy substance on the trading. Okay. Now I come to the lighter side of the webinar. This is actually my sales talk when I talk to my clients. How do I convince them to come to option selling? I tell you, it's very interesting. Why I have decided trading is the best. People also ask me, sir, why don't you do investment? Right? Okay, for them. If you are talking about the investment, you can invest in gold, you can invest in real estate, you can invest in stock market, you can invest in fixed deposit, all these things. So I will tell you what is the long-term return of all these things. But to tell you that, I have to explain something called rule of 72. Suppose you go and deposit 100 rupees in a bank. If the bank pays you 10% interest, means for 1 year they give you 10 rupees interest, but 2 years 20 rupees. But that is only if you are taking a simple interest. But 1 year 100 rupees, 10 rupees is interest. For next year, the capital become 110. So they give 10% of 110. So that means second year you get 121. So that is called cumulative interest. So if you put the money in a bank, if the bank pays you 10% interest, and you want to know how long it will take to get 200 rupees, how long it will take to double your money, right? So for that, you don't have to take a calculator. You don't have to do a difficult calculations. There is a very, very simple calculation that is called rule of 72, which means 72 divided by the rate of interest, that will give you the time period. Bank pays you 10% interest. 72 divided by 10 is 7.2. That means your money will double in 7.2 years. Okay, so that's called rule of 72. Okay, now I'm asking you, you put the money in bank FD. Of course, there are so many economic cycles. In 1995, I remember there was something called Indra Vikas Patra. You put the money there, it doubles in 5 years. So depending on the interest rate in the economy, sometime money double in 5 years, sometime the money double in 6 years, sometime money double in 8 years, Okay. So it's a various cycles. So we are talking about the long term, last 25, 30 years. So we take average money doubles in 6 years. I'm talking about in fixed instruments. And believe me, once upon a time, I put the money in bank FD, the money doubled in 3.5 years. The bank gave me 21% interest. It was in 1996. I was an NRI. So that time for NRI deposits, the banks were offering as high as 21% interest. My money was double in 3.5 years. Okay. So we take an average money doubles in 6 years in bank FD, which is risk-free. But if you are putting the money in stock market or gold or real estate, you are taking some kind of a risk. So therefore, reasonably assuming we should get our money doubled at least once in 5 years. That's the least expectation I'm talking. Okay. So if you all agree that money should double in 5 years when we take the risk, okay, let us see what has happened. First, we talk about the gold. In 1990, the gold price was 3,200 rupees. 3,200 rupees is for 10 grams of gold. Okay. Now I'm not very sure. I think it should be around 40,000. Okay. From 1990 to 2020, it was 30 years. 30 years means what? 5 years. So if the same money has been put in bank, okay, or you are expecting double in 5 years, 3,200 should have become 6,400 in 5 year. Second 5 year, it should have become 12,800. Third 5 year, fourth 5 year, fifth 5 year, and sixth 5 year. That means, assuming that your money should double in every 5 year, the gold price should be 2 lakh rupees now. But is the gold price 2 lakh rupees now? 100% no. I think it should be somewhere between 40 to 44,000. Okay. But those who don't believe in 1990, what was the price? I gave the link here. I've taken the historical gold rate data in India. So there they say in 1990, so they're showing 3,200. And this is the below chart represents the historical movement of gold prices in India. The chart contains average annual price of gold from 1964 to till now. The price 24 karat 10 grams. So see, if you have invested in gold 30 years before, okay, assuming, or let us say even 6 years double, but still it should be at least 5 cycles and still it should be 1 lakh. So it is not even that. So for a very long-term investment, gold is not a good investment. How about real estate? Of course, real estate I cannot talk because there is no data. Okay, I can give my own example. I was working in Singapore, NRI, put the money in bank FD. It was giving 21% return, 3.5 year double. I break that FD to buy an apartment in Chennai. And I bought the apartment for 10 lakh rupees in 1996. That is about 25 years before. So it's a 5 cycle. That 10 lakh should have become 20, 40, 80, 163.2 crore. But if I want to sell my apartment, it goes only about 60 lakh rupees only. But where is 3.2 crore? Where is 60 lakhs? Of course, I stayed there without paying any rental. So that's a different story. Then look at the stock market. You know, Indian stock market, NSE India, started in 1995 with 1000 as the base. And now it is 9,000 around. So it's about how many years? 25 years. So same 5 cycle. If you put the 5 cycle, it should be around 32,000 index. But now the index is only 9,000. People can say, sir, if you bought Infosys for 1 lakh, now it is 100 crore. Okay, how do we know? Even Narayana Murthy does not know. If he knows why he is going to give you the share at 100 rupees, 95 rupees. He gave the share at 95 rupees. You could have borrowed the loan at any interest rate. You could have run the show. Don't believe all these stories. For every one success story, there are hundreds and hundreds of failure stories, right? Salman Khan is getting 100 crores. Shah Rukh Khan is getting 100 crore. But you and me go to the movie field. Do you think we are going to get? So there are hundreds and hundreds of people they are losing. For every one success story of Infosys, I can tell you hundreds and hundreds of failure stories in stock market. And 10 rupee share has gone to 10,000. The 10,000 rupee share has gone to 10 rupees. How do we know? So we cannot calculate those. We can calculate only the average index return. So the average index return is only this. Okay. In the last 25 years, the Nifty return did not even beat the public provident fund return. Okay. So in the long run, no asset classes give better return than bank FD. But that is why the best thing in option selling, if you have got the money, you can put it in bank FD. You can give bank FD as a collateral to the exchange. And then in option selling, whatever profit you are getting is an extra profit for you, right? So this is my selling point, main selling point. But of course, I heard nowadays NSE is not taking FD as a collateral. That is why now I ask my clients to put the money in Bharat Bond, where the return 7.58% is actually much better than the FD return. Okay, now some more thing about stock market, why most of the people fail. I find many people, technical analysts, they do based on the technical, they take position. Most of the time stop loss gets hit, you know. So I just used to tell for fun. One guy wanted to set up a restaurant. He had 1 crore capital with him. He wanted another 1 crore loan from a bank manager. He met the bank manager, told him, sir, I have 1 crore capital. You give 1 crore, I will have 2 crore. I'm going to set up a restaurant. There is a rental, there is a raw material, there is an employee cost, and this is how I'm going to run the show. And I am going to make so much profit. I'm going to do the repayment of the loan. Can you please kindly give me 1 crore loan? This bank manager previously was a stock market trader. After listening everything to this guy, he asked one question. Okay, fine, everything you said, okay, fine. Now you tell me what is your stop loss. Does any bank manager ask like this? Does any person setting up a restaurant decide the stop loss before setting up the business? No, they don't do that. What they do, they set up a restaurant, they run the show. If they face difficulties, they try to solve that problem. And then at some point of time, if they feel that they cannot manage, then they just exit it. But before starting itself, they don't decide. But see, stock market, before starting itself, they decide the stop loss. I always tell, whatever people do in stock market, everything is wrong. That is why 99% of the people lose money in stock market. Okay. So successful people don't do different things, but they do things differently. Okay. So that is where here I'm telling you the long-term options, put the money in bank FD or Bharat Bond and give it as a collateral, play in long-term options. So these are all the things which I'm thinking differently. Okay. So I'll give you one more nice discussion I had with Dr. Velumani of ThyroCare. So there was some conference. So he came that conference. I was also there in the conference. I just went and sat with him. I just introduced myself. And there were about 10 people. They were all talking to Dr. Velumani very bad about me. Mr. Sundar is a high risk taker, sir. His option selling is unlimited risk and this and that, everything. And Dr. Velumani told them very simply, okay, everyone listen to me. I don't understand what you people are talking. I don't know what is call option, what is put option. Okay, but I ask you one simple question. Raise your hands. How many of you think what Mr. Sundar does is wrong? Everybody raise the hand. Then he said, if every one of you say what he is doing wrong, now let me tell you what he is doing is right. So he spoke in Hindi, something like, if you're thinking like your Padosi, forever you will be like a Padosi only. So don't think like a herd. What you do is different. When a person does something different, either he must be too stupid or he must be too intelligent. Only the time will tell you whether he's too stupid or too intelligent. So I like the way he was talking, right? So like, everybody do trading, everybody follow technical analysis, everybody put the stop loss, everybody do, and everybody losing. Anybody come to me, ask the very first question, why do you want to come to stock market where 99% of the people lose money? Right? If 99% of the people fail in one college, will you put your daughter or son in that college? No. But why you come to the stock market where 99% of the people lose money? Okay, fine. You come. Then what makes you to think that you are different from the rest of the 99%? So there must be some difference. Otherwise, you are not going to win. But the way I explain, you see how differently I think. Okay. Right. So initially, the people want to know, sir, have you read any books? And even now, I tell you, many people are thinking that I read some books which nobody has read in India. So that's a very secret book. And there I got all the magic formula. And that is the reason for my success. One day I got annoyed and I give this kind of reply. That is possible only if somebody written a book and after writing the book, he died immediately. And then he left only one copy and I'm having that one copy. Then only this kind of things possible. If there is a book I read, I'm successful, then I'm sure everybody would have read that book. The books are being sold everywhere, right? So I tell you, I never read any book. Okay. So one of my relatives was a stockbroker and he asked me to read some books to write exam to give him a certificate which will be useful for him for one or the other reason. So he asked me to read a book called NCFM derivative module, but now it is called NISM series 9. So that is the only book I read. In that book, somewhere I've seen FD can be given as a collateral. And that was a great turning point in my life. I could convince my wife also. Look, dear, I'm going to put the money in bank FD only. The interest you will be getting it directly. And I'm going to give it as a collateral. I'm going to do the trading. Right? But believe me, after knowing that FD can be given as a collateral, it took nearly 3 to 4 years for me to find one broker to accept this. Nobody knew. I was thinking, what? Everybody is reading this book. There was a post called dealer post who is placing the orders on behalf of the clients. And the dealer can work as a dealer only if he passes this examination, which means that this examination is passed by thousands of people in India, but nobody knows, only I know. Why? The reason is very simple. Most of the people read only to pass the exam to get a job, but I did not read the book for passing the exam to get the job, and I read it with passion. So anything that you do, you have to do with your passion. And I always tell people, if you really want to grow in your life, there is no, many people tell me, you know who I am? I'm from IIT, you know, I am from IIM Ahmedabad, you know, right? I tell you, what you study in IIT, IIM is of no use. They are all technical knowledge, will be helpful. But if you really want to grow, and you go back to primary one and read the books, that is where the values are being taught. Okay, so the passion. And I'll tell you a small story I remember when I studied in primary 1. There was a rich man and walking along with a dog. A street dog came and disturbed him. So the rich man asked his dog to chase the street dog. But the street dog ran away. His dog could not catch the street dog, comes back, and then the rich man scolded the dog. I spent so much money for you, and you are not even able to catch the street dog. Then this dog says, sir, I ran to show my loyalty to you, but that dog ran to save its life. Sir, therefore that dog can run faster than me. So if you are running, don't run like a rich man dog. Run like a street dog. So with passion, with speed, with vision. Okay. So other than that, I'm not a big fan of writing the books, reading the books. Okay. So after I read the book, so I found that most of the time traders were losing in the market. It was only the brokers who were making money. The STT stamp duty charges were so high. Like those days, you have to pay STT stamp duty for the full contract value. But nowadays you pay only for the premium value. So sometime around 2010 or 2011 only SEBI changed the rule. So that is when I actually, the option trading picked up. Then I appeared on a Sun TV as an expert. Then there was a conference called Traders Carnival in Mumbai 2018. So I was a speaker there. Then I came to CNBC. So that is how I became very, very famous. Then I've been writing a blog. Okay. And I did not have any mentor, though I'm mentoring many people now, but I did not have any mentor. So that's why my famous statement I used to tell, all these are my own statements. A person who is lost in a forest, if he finds a path, he comes out of the forest. But that is nothing great. The one who is lost in a forest cannot find any path. He creates his own path. So that is something great. So you come, immediately you get a mentor, you get a good financial support from your parents, you get a mentor, you pay a lot of money to learn everything. And then, you are coming up with something that is nothing big deal. But I came from zero without any support. My parents never supported me financially because they could not. And I did not even have a mentor. So I've grown everything myself. So people always ask me, sir, what is the first advice you give me if I want to grow like you? My first advice is that you don't ask any advice, because I never asked any advice from anybody. Learn yourself. So some cautions before taking the plunge in stock market: never, never, never trade with borrowed money, and do not take a revenge trade. I lost it, so therefore I have to do another trade immediately to recover. If you have lost it, you trade more, you will lose even more, right? And I tell you, as I told you earlier, a research says people tend to take more risk when they are already in problem. So never do that mistake. Do not ever assume anything in the stock market. Market has already fallen so much. How it is going to fall some more? No, don't ever. Market can go to zero. You have to assume like that. But now even I have to change. Market can go to -1,000 also. Looking at the crude oil prices going to -37, right? So never assume anything. I'll tell you a simple story. There was a guy called Nick Leeson. What he did some short strangle in Japanese index. So, but Japanese index started falling. It has already fallen so much. So his put options are having huge losses. But he thought, market has already fallen so much, how it is going to fall some more? It cannot fall more, it has to go up. So what he did, he went long in futures. And then he went to sleep. That day night, the world's biggest earthquake came in Japan, Kobe earthquake. The next day, Japan index fell another 8-10%. So he made a loss of about $4 billion. In UK, there is a bank called Baring Bank. That's something like a State Bank of India, the oldest bank of UK. So he was handling that bank's money. So that bank has gone bankrupt because of this guy. He lost 4 billion plus. And that bank had to be sold later for £1 sterling. So don't ever assume anything in the market. Okay. And finally, the markets are irrational. Never go with rationality. Many people say, I'm Ahmedabad IIM, okay. Yeah, you are Ahmedabad IIM. You can think very clearly. You can think rationally, but market is not rational. Market is always irrational. So that is why here 10th standard guy making very big profit and IIT IIM people are losing the money. So don't ever go with this kind of mindset. Okay. These adjustments I'm skipping. That's because I'm not teaching the adjustments. I'm teaching only taking a strategy with entry and exit only. So no adjustment. Adjustment is only for the people who have got more capital and more thing. Right. So risk management is a very, very important thing. So if you think, I'm already in a loss of 100 rupees, or if I have why to exit now, I may wait tomorrow tomorrow market may recover, that tomorrow market will gap down 10%. So don't ever think, okay? But keep a stop. When I say keep a stop loss, the stop loss is not in terms of money. And I told you, India VIX 30 is your stop loss. When that comes, you have to exit. Okay, the Einstein driver joke I've already told you in another instant. Okay, so I don't keep any individual stop loss. Once you sell call option, put option, once the VIX crosses 30, you have to exit all the position. Don't ever exit only put option and leave the call option as it is. When you enter or exit, you have to do everything together. So that's the risk management. Okay, so respect the markets, respect the risk, and happy investing. And hope you all benefited by this webinar. And if you have got any comments, any questions, you can ask us. We will get back to you. So thank you for watching this webinar. Thank you very much once again.
Thank you, PR, for this lovely session. It's always a pleasure to hear from you and get some words of wisdom. Friends, Elon Markets have always supported initiatives the way PR has taken. And the most exciting part is that PR doesn't make any money by sharing this wisdom. All the money which has been collected by him goes to charity. So a big round of applause, big applaud from my side to PR, to you and to your initiative. I'm sure this video will go a long way in making people much better and more sensible options trader. Now, thank you so much, PR. Just one small thing for our users. Elon Markets has lended their GoToMeeting platform for this purpose. Now, if you have any question, you can ask a question in this platform. The window is available to you, and all these questions will be collected and forwarded to PR, and he will respond as per his convenience. Apart from that, he is a very active person on Twitter. So you guys can actually ask him questions on Twitter, and I would request PR to reply to your fans or to your followers in Twitter as they may ask you a few questions there. All right. So thank you everyone for attending this. Thank you, PR, for this session. It was great hosting you here. Hope you guys have good time. Stay safe. PR, you also stay safe. It's very important for us to have you to keep on providing your wisdom through your journey. And guys, be good, stay safe, and have a great life ahead. Thank you so much, everyone, for attending this.
அவங்க நம்மகிட்ட பேச மாட்டாங்களா?